righty. Here we go. Thanks, y'all.
Thank you. Good morning, everybody. Like Jennifer said, my name is Bailey, and we have Chris on as well, and we are here to touch on program income. So we are going to do some tracking program income best practices refresher. We did a similar training about maybe a year and a half ago at this point. So just a few things that we can touch on, and then how to complete program income reporting forms. How can we all get on the same page? And like somebody was just saying before we kind of got kicked off here, how can we make it so we're not playing the telephone game, and so that everybody's kind of on the same page with where we're expecting the reporting to be. All right, so why are we here today? The Colorado Department of Local Affairs, Division of Housing, is responsible for the oversight of program income derived from CDBG, home, and HDG. So, that's like the definition of what we're doing. We're responsible for those program income funds. But keeping in mind that additional funding opportunities can come online at any time. And we will update the guidelines accordingly when that happens. So exciting stuff that, things can always kind of be changing.
Sorry about that. Program income is any type of income that you receive or that a subrecipient receives from any CDBG, home, or HDG funds. A subrecipient is any entity administering a program that generates program income. More specifically, all RLF revenues that result directly from a HUD subsidized activity are considered program income. That means 100% of loan and lease payments and payoffs for DPA and rehab programs are considered program income. There we are. All program income is subject to CDBG and or home regulations. It depends on the original source. HDG programs will follow either CDBG or home. Excuse me. And this will be evaluated on a program basis. It's specified within each contract. So if you do have questions, double check your contract. Feel free to reach out to us. Also, we can always go through it fairly quickly, or may know off the top of our heads exactly which side you're falling on there. Excuse me. DOH does have the right to adopt policies that are more restrictive than HUD's policies. Obviously, we are never less restrictive, but we can adopt additional policies if we so choose, or if DOH chooses. Eligible are originally funded activities, program income generated by payments from beneficiaries of loans in the RLF program activities must be revolved and remain committed to the same type of activity as it was originally intended for. This means if you do have a DPA program and you have a large amount of program income, it needs to revolve back into down payment assistance. It can't just be shifted without a lot of additional paperwork to like SFOO or any other program related costs that are not specific to DPA. Loan servicing, DOH does have the right to approve program income to be used to cover your loan servicing fees and expenses. Other project delivery costs, rarely, but on a case-by-case basis, DOH can approve draws from program income for other project delivery costs. Each request is subject to DOH DOLA review and formal approval. Ineligible program income uses would be administrative or project delivery expenses other than those described previously. Those expenses are funded through active contracts, but not through the program income.
All right, so timely disbursement of available balance. DOH requires that all program income is committed or dispersed for RLF program activity loans before additional funding may be awarded. So when it comes to this, keep your program income balance in your thoughts, especially when requesting additional funding. That is going to be one of the first places that we're looking if you are, requesting additional funding. The folks who support us around us on staff are going to want to know where your program income sits, what's sitting in there, how can we leverage that before we give out additional funding. So keeping that in mind, and then with the same intention and purpose of keeping these program income funds infused into your community. So, we don't want to take them back. We hope that they stay with you. And so continuing to either use them for their intended purpose or talking with us about how you can, switch it up. And then keeping in mind, like Chris just mentioned on the previous slide or before that, that we either follow the CDBG or the home guidelines. We do use home as safe harbor, so you can kind of fall back onto that, but really reviewing your contract for what is applicable to your program income. All right, next is regarding reporting. I have a lot to throw at you with this, so just, stick with me. So our classic, I would say, reporting right now includes you all giving us those quarterly financial status reports and then the loan portfolio status report every 6 months. And so the next couple slides, we're kind of going to go over those reports in more detail, and then boy, do I have some great info for you about them. And then you must provide the documentation on each RLF account by activity and by funding source. This is something new-ish. Our current guidelines, the 2018 program income guidelines, suggested that all funding sources and activities, be separated by account. And then the question was, if there was a barrier or an administrative burden to you to keep those separated, we would take that into consideration. As these programs grow and as the agencies grow and as the revolving loan fund grows, it's really hard to keep track of things if they're not separated out. We're really wanting to see the details of what's happening with the program income. And of course, if the program income is shared with sharing with funds that aren't DOH. Some people aren't as, willing to give us all the documentation we need, just things like that. So we're just trying to make sure that, all the bases are covered and that program income is being, tracked and reported on appropriately. So that's our first kind of step in making that decision. Think like early next year is when we hope to probably have the new program income guidelines come out. Like I said, they were updated last in 2018. So a lot has changed since then. And so we would like to accurately reflect those changes, maybe make some process improvements on our side to hopefully continue, tracking this program income to the best of our abilities. And then feel free to reach out to myself or Chris, whoever's your assigned AM, and chat with us if you, especially as we're rolling out these program income guidelines, thoughts and ideas. Of course, we're happy to kind of hear your input and how that would affect you. Like I said, on our end, we're kind of hoping to make it easier to track these items, but also always love to hear from you all because you are doing the groundwork, right? So help us help you. And then I think that's all I had to say on that one. Like I said, lots of good info. All right, this slide is the quarterly financial status report. This is the report that you all are used to providing to us quarterly for active contracts. And one of the changes that's going to be, I'll touch on that later. I'll tease you a little bit. We'll know about the changes later. But for those of you who are still doing, paperwork and things old school, and that would be all of you right now, I think, you will continue doing the quarterly reports for us. It's in front of you on the screen. You'll see the top half is really going through, expenditures to date, what happened in that quarter, making sure that your dollars and my dollars match. And then that bottom half there is relating to the program income piece. And so really important to just keep in mind that we are catching that program income on active contracts quarterly. And then for those who do not have an active contract, we're catching back up with you every 6 months. And I think that's what I'm going to say about quarterly reports.
Loan portfolio status reports are due January 20th and July 20th of every year. a few things about them. With those, you can report of all of your program income on one form. You don't need to send a separate form for your CDBG or HDG. We've got 4 columns there. If you have 5 different programs that you have running, let us know. We're happy to add another column. We don't want to, have you adding more paperwork to your life. When you're completing the report, please be sure that the cash balance at the start of the period equals the cash balance at the end of the previous period. That makes our bookkeeping a little bit easier to deal with and makes a little more sense to us. The funds should be held in a separate bank account so that when you are recording interest from that PI, we understand that the $250 is actually for that one specific fund and it's not spread across all of your rehab funds. You could have, 8 different funding sources. You put them all in one bank account and it becomes much more difficult for all of us to understand what's going on. So, separate bank accounts are always advised, and I believe will be a policy at some point in the near future. Fees received. I've had a few people reach out to me saying they can't receive fees. We don't allow late fees or anything else. For the most part, most contracts will allow late fees. So if you do have a question on that, double check your contract, check with Bailey and I. We can assist you with that. But if you do have late fees, that would be where it goes in that one line item. Other unusual circumstances. If you put $5 in that field, or if you put $2,000, please give us detailed information on that. It's hard for us to understand if it relates back to something from 5 years ago. We may need more paperwork. If it was an adjustment through accounting or something, let us know what that adjustment is and why it looks so strange to us. There's a little bitty box at the bottom to add those notes to. If you need more room, absolutely fine. Another piece of paper, body of the email, anything is fine. Just keep us in the loop on what those numbers are in that other unusual circumstance section.
Yeah, and just to pipe in, this form is updated. And so Jennifer, who is our lovely host of the meeting, once we are done with our webinar today, she will be more than happy to share that fresh document with you.
So as we were just discussing, the semi-annual program income for the RLF portfolio reporting, it is due twice a year, so January 20th, July 20th. The frequency could be increased by HUD. I know we're all hoping it never is, but you never know. HUD does their own thing some days. CBDG and home information is reported separately, as is information on each RLF program activity. So we do have numerous reports that can fit together in some ways. They don't always, but that's a different discussion. Gross program income earned for the reporting period obviously goes on that report. Total number of loans in the reporting during the reporting period, new loans, dollar amount of that loan portfolio, total number of loans closed, demographic information, which should be on the beneficiary report that we receive. Incomes of new loan beneficiaries, again, that would be on the beneficiary report. Accounting documentation, we do require 6 months of bank statements so that we can understand the payments and what's going in and what's coming out. Transactions during the reporting period and the balance sheet so that we can also see that your balance that you're showing on the report equals the balance sheet, which also equals the bank statement. We do understand at times, and I know I have this in some programs that I manage, your bank statement comes out July 20th, the report's due, or June 20th, the report's due July 20th. There could be a vague difference in between, but if you explain that to us, that's absolutely fine. If we're a little bit off and it's because of that 10-day delay between the end of June and when your bank statement came out, feel free to explain that to us. We can also ask for additional details, which many times we do, but if you give them to us in advance, we won't ask you because you've already explained it. Late reporting. This has become a fairly big one, but communication is key. And I know, and this person may or may not be on the call, but I know somebody who was reporting and it was, gosh, it was the 20th, reports were due. they didn't have internet most of the day. And so they did get it into me, and I felt so bad. So, if there's something that comes up, if it's illness or no internet or an emergency, reach out to us. Or if you submit 2 days late and say, hey, we didn't have internet, we understand. We want to be flexible. We want to work with you. It's, a couple days late is nothing. If you are 3-6 months late, that can be a problem. We do try and notify everyone in December and June, like, your reporting is coming up. We will need this by the 20th of January or July. Normally it takes us a couple months to catch back up and then notify you if we haven't received that report. I'll admit there are times that it is in our email. We didn't see it or we didn't save it properly. We're human also, but just let us know, oh, hey, I sent it here, forward it again. And we're fine with that. Where we see the problems is when we don't receive the reporting and we continually ask and we aren't receiving it. And although it's a problem for us, it can be a problem on the other side in a much larger realm, as this can delay. We can recapture program income. Loan servicing fees will be held or can be held depending on how delayed you are and what the reasoning is. But the biggest one is if you are delayed in reporting, and if it was the 2023 January through June report, we can work with you. If it goes back a couple of years and you are applying for new funding for a new program or project, that can delay the contract. It can delay state housing board. So there can be a lot of delays. Keeping up on reporting, it's one on a list of a million things that needs to get done, but it's very beneficial for everyone to get those in as close to on time as possible so that you don't see delays in other items like payments or contracting or funding. DOH does require, as we were discussing, that program income be spent on the same activity for which it was originally contracted. If there is a RLF account balance that exceeds what the agency could reasonably spend within 2 years, the agency can reach out to us or the development specialist and potentially repurpose the funds. So if you have $300,000 in a down payment assistance program income, and you're looking at a development of a multifamily complex, there is a potential working through us that you can return the money and then receive it again for a different purpose. So when you're looking at those balances as you're reporting, you can always consider, is there another use for this? Will we jump back into down payment assistance or rehab? So there are a lot of options with those funds rather than just having them sit there and no one's real sure what to do with them. So take a look at your accounts. Let us know if you're seeing something in the future that you might want to use those funds for.
All right, what's in your contract? So the program income is defined in the contract, and then there's going to be basically just a couple kind of points in the contract regarding program income. The biggest thing is that it really does point you back to those program guidelines, and that's intentional. And so, again, keeping in mind they are going to be updated, probably next year, but your contract will very likely, if you have a PI question, lead you back to the program guidelines. And I just saw we're asking if we can email the slide deck, and I bet Jennifer would be more than happy to do so. I'm signing her up for that. Okay, so here's all my exciting updates, the moment you've all been waiting for. Okay, so couple pieces. In Neighborly, we've all been kind of promising you that we will be in Neighborly, and like the day is so close to being here. Chris has actually done more heavy lifting than I have in terms of like getting payment requests into Neighborly and things like that. But just to kind of give you a back end view of what's going on, we are, as the asset managers, myself and Chris, inputting all of the budgets and payment requests for all of these contracts that haven't been in a system for a while. And our goal is to get you all approving and pushing through payment requests and quarterly and reporting to us in Neighborly moving forward. So, don't pull the trigger today. We will kind of probably send you just an email like, hey, start giving Neighborly a try. Once like me and Chris as the asset managers have set up Neighborly and feel that it's ready for you to start pushing buttons. So with that being said, the reason that the quarterly report is hopefully going to become a thing of the past is because in Neighborly, you will not have to do like that table report, the quarterly financial status report, like you have historically. When you're in a system, budgeting already knows where your financial status is. So that's wonderful. And so when you do go into Neighborly, the narrative questions will populate. So you'll still answer, like, what loans did you close in what counties, what jobs are still open, things like that. You'll still answer those narrative questions. And then we are going to try to figure out how the program income is going to be addressed. Currently the quarterly report, top half is that current contract, bottom half is that program income piece. We're going to probably be building in questions into Neighborly to grasp the program income pieces. And then also kind of looking to the future, both with the SFOO rehab portal and with like kind of like that PI business need. We're shopping around to see kind of what can meet that need. So for agencies that do have the rehab program and we're planning to use Neighborly as your system to track the loans and track contractors and all of that jazz. Throughout the year or two that we've been working in Neighborly, it came to our attention that the SFOO rehab portal just can't do what we need it to business wise. And so we will not be having you all manage any sort of rehab portfolios in Neighborly in terms of like, that client loan situation. You'll still be able to submit pay requests and things like that. And then again, shopping around for the SFOO rehab business need, as well as like that tracking program income business need and figuring out how that we can, satisfy all of that. And another thing I wanted to touch on was, it's been a couple of years, I think, since DOH has really gotten the finger on the pulse in terms of like rehab agencies who do still have this business need of like not, DPA agencies kind of shared with us that they already have a system to use. They don't necessarily need some sort of loan servicing system because they've kind of got it under control. SFOO, last we knew, those rehab agencies, that was a business need. So if you do have a rehab program and that is still a business need, will you let myself or Chris know just so we can kind of know that the need is still there and it makes sense for us to continue, doing this business shopping for systems and programs that will help all of us. I just threw a lot at you there. I promise the question slide is coming. So I'm going to keep it moving and then, get to questions. So quick plugs and reminders. The DPA application is due December 1st. We are with Prop 123 online. We are really encouraging folks to apply if you've got the need and, your area has opted into Prop 123. Chris and myself are happy to set up a more, one-on-one call with you to like talk through what that actually looks like with your program or, what your thoughts are with a new program. Help us help you. And then in the new year, we do also intend to have additional application opportunities where we may or may not be like reinventing the wheel. And so if you're trying to do something wild that you're like, DOH will never let this fly, catch us next year and let's chat and let's see how we can make things work. And then I have linked, and so when you get the slide deck, it will link you there, but I've linked the OHFS contractor and partner agency trainings. Of course, this training, the previous trainings that we've done, all of that good like income calculation stuff is all on that website. But also want to point you to the really helpful Neighborly trainings that exist on that site. So our wonderful coworker Teresa recorded herself, submitting a pay request, submitting a quarterly report. And she did it for the HDP module, which doesn't isn't 100% DPA or SFLO, but it will certainly guide you in the right direction. And then myself and Chris, who are admittedly learning along with you, happy to like step in. You know, Neighborly, there's like some kinks, and then we're able to go in and like fix the kink, and then we can all move on. So just let us know if you're seeing issues in Neighborly. If you need any help or walkthrough, we will send you to those videos first. But then if it's something additional, happy to help. And then RLF email blasts. So if you have not received the email blast that came from MailChimp, but it says it like comes from me, feel free to reach out to me with your email address so that I can get you on the list. That's really going to be where those like email communications are coming from, you know, the reminders about applications, the reminders about loan portfolio status reports, any updates like this new one that's going to be coming out is going to also have a ton of Neighborly information, really kind of just summarizing what I've already told you, probably in a more succinct and much better fashion. But if you do touch the RLF program at all and like need to be in the know for reporting or news or things like that, definitely make sure you get on the email blast so that I can get you all of that good information as well. And I think that leads us to questions.
Folks, feel free to enter
Hi,
questions. There we go. Thank you.
Hi, it's Megan from Eagle County. Thank you so much for doing this. Would it be possible to set up like a 15 or 20-minute call with someone just to like have some one-on-one training with our reporting that we do?
Absolutely.
Thank
Short
you. Should I
answer,
reach out? Bailey, Christine, who is the best person should I contact?
Megan, I
Yeah.
will reach out to you by the end of the day, and then we'll figure out what
Thank you
works
so much.
best.
That will help me not have anxiety attacks every time we have to do this. I really appreciate it.
I would absolutely love to help avoid those for you.
Thank you. Okay.
Yeah, and great example, Megan. We're always happy to just like hop on a chat. You know, even with our active agencies who do this all the time, we still have to hop on every so often and like just clarify, you know, make sure we're all on the same page or that we're getting the information that we're actually looking for. So always happy to hop on.
Okay. Similar question. Is it possible for me to get into contact with someone to find out what reporting is required for each of our communities? We lost a lot of institutional knowledge with the retirement of a compliance person, and I would like to get it all together for the next person doing compliance. This is M. Dane. Yeah.
That's a beautiful question. Wonderful. Love to hear that. Yeah, absolutely. I'll just go ahead and go to the next slide since I think y'all got my question mark down. Myself and Chris's information is here on the slide. You'll be getting the email deck, so that'll be, you know, there for you. Also on the DOH webpage. And yeah, if the wonderful. Thanks for the clarifying question, Ariel. You know, if we reach out to the Aurora Housing Authority, and it's not like, you know, necessarily RLF related, but Division of Housing as a whole, we're also happy to like connect you to the right person who can help with the compliance and things like that. So now you at least have a starting point. And then Wendy, yeah, so Jennifer, just keep signing her up for things. I'm sure she's thrilled. She will be sending that out for you when we wrap up here. And then you'll have access to the loan portfolio status report. And then great point. We'll probably get it uploaded into Neighborly as well.
Figure we can get those on our website as well. And of course, we're going to have this recording on our website should folks need to come back to it. Any other questions for Chris or Bailey? Seeing and hearing none, please feel free to reach out to these two when it comes up. And we're always a resource. And we appreciate your attendance today and hope you have a good one. Thanks so much. Ooh. Stevie Medina, what question do you have? You might be muted.
Sorry, y'all. Can you hear me?
Yes, we can.
Sorry, y'all. I meant for that to be a clap. Good job. No questions.
We'll take it. Thank you.
Little confusion. I will be talking to Christine here pretty soon. I think she had a question for me, so I'll get in contact with her later. But thank you very much.
Thank you.
Yeah, Jesus, if you will throw your email in the chat, I can get you added to that. Oh, Ariel, steal the words right out of me.